Welcome back to the Daily Crypto Roundup. Today, the crypto market is giving us one of those sessions where the surface looks quiet, but underneath, the next big narrative is starting to form. XRP is stuck near a key breakout zone. Analysts are watching for a sharp move. Political meme coin hype is showing signs of fading, and behind the scenes, major banks are pushing tokenized deposits onto institutional blockchain rails. So this is not just a price story today. This is a market structure story. It is about the difference between hype, utility, speculation, and real financial infrastructure. Just before we get into it, this episode is brought to you by Canton, our official exchange partner. If you want a straightforward way to buy, sell, and explore crypto, Canton is well worth a look. It's not financial advice, but if you want to check out the platform, use our link in the description. Not investment advice. Crypto trading involves risk of loss and is offered to U.S. customers through Payward Interactive. View legal disclosures at Kraken.com. Okay, let's start with XRP, because this is where a lot of retail attention is sitting right now. XRP is trading around the $1.44 area, and according to CoinDesk, the token is compressing inside what traders call a triangle squeeze. That means the price is being pushed into a tighter and tighter range, with lower highs pressing from above and higher lows building underneath. In simple terms, buyers and sellers are running out of room. CoinDesk's framing is that XRP is stalling just below resistance, but the pullbacks are becoming shallower, which can suggest sellers are slowly losing control. That does not mean XRP is guaranteed to explode higher, but it does mean the next move could be sharper than the recent sideways action. The key level being watched is around $1.50. If XRP can break through that area with volume, the market may start treating it as a proper bullish breakout. But if it fails and loses the lower support area, especially around the $1.39 region, then the whole setup weakens. So for XRP holders, the message is simple. This is not a boring chart. This is a compressed chart. And compressed charts tend to resolve one way or another. That ties directly into the second XRP story. The Street covered analysis from Ali Martinez, who says XRP is forming a symmetrical triangle on the 1-hour chart. The report says XRP has lost more than 20% of its value this year. But Martinez believes a sharp move could be coming soon. His short-term target, if the triangle breaks upward, is around $1.58, which would represent roughly a 10% move from current levels. Now this is where we need to be balanced. A 10% move in crypto is not wild by historical standards, but it matters because XRP has been struggling to regain momentum after the wider market damage from last year's crash. The Street also notes that spot XRP exchange-traded funds have pulled in more than $1 billion in net assets so far, which shows that institutional demand has not disappeared. So the XRP story today is not just analyst says price goes up. The deeper story is that XRP is sitting at the intersection of technical compression and institutional interest. If the chart breaks higher at the same time that inflows keep supporting the narrative, XRP could become one of the cleaner altcoin setups to watch. But if the breakout fails, traders may treat it as another fakeout in a market that is still selective, still cautious, and still punishing weak momentum. Now let's move from XRP into the Trump meme coin story, because this gives us a very different side of the market. According to The Independent, the top holders of the Trump-linked meme coin have been invited to Mar-a-Lago for a crypto and business event. On the surface, that sounds like a status-driven crypto event designed to reward the biggest holders. But the more interesting detail is not the event itself. It is the reported collapse in the amount needed to qualify for VIP access. The Independent reported that the median holding needed for the top VIP group has dropped sharply compared with last year. In simple terms, the price of being seen as one of the elite holders has fallen dramatically. And that matters because meme coins are not priced the same way as utility networks. They are priced on attention, status, community energy, celebrity association, and the belief that the next wave of buyers will come in higher. When the threshold for VIP access falls, that can suggest the hype cycle is cooling. It does not mean the coin goes to zero tomorrow. It does not mean nobody is still trading it. But it does tell us that the market may not be chasing the same narrative with the same intensity. And for political meme coins especially, that is important, because the political connection can create massive attention, but attention is unstable. It can spike quickly, then disappear just as fast when the crowd moves on. This is why meme coins are so dangerous for newer investors. They can look like the easiest money in crypto when momentum is strong. The community is loud, the price chart is moving, social media is full of bullish posts, and everyone seems convinced that the next leg higher is obvious. But once attention starts fading, liquidity can drain fast. The same force that pushes price up on the way in can accelerate the drop on the way out. The Trump coin story is useful because it shows the difference between hype and durability. A meme coin can absolutely have huge moments. Some traders make serious money from them. But as a long-term asset, the question becomes much harder. What keeps people buying once the event is over? What keeps liquidity there once the celebrity angle gets old? What gives the token lasting demand beyond attention? And that brings us into the wider theme of today's roundup: real use cases. CryptoNews.net ran a piece arguing that the crypto market is shifting toward a phase where real utility matters more than pure narrative. That is exactly the direction the industry seems to be moving. Investors are still interested in upside, obviously. This is crypto. But the question is changing. It is no longer just, can this coin pump? It is becoming, what does this network actually do? That shift matters for coins like XRP, Stellar, Solana, Ethereum, and Cardano. Not because all of them are guaranteed to win. They are not. But because they are at least trying to answer the use case question. XRP and Stellar are linked heavily to payments and cross-border settlement. Solana is built around speed, low fees, and consumer-scale applications. Ethereum remains the dominant smart contract settlement layer with huge developer activity and institutional attention. Cardano continues to pitch itself around research-driven blockchain infrastructure and long-term development. The market will still have meme coin cycles. That will not disappear. But as institutions become more involved, as exchange-traded products grow, as tokenization becomes more serious, and as regulators slowly define the rules, the market may reward networks with clearer purpose. That means transaction volume, wallet activity, settlement demand, developer ecosystems, payment partnerships, and real-world integrations become more important than just social media noise. This does not mean every utility coin is automatically a good investment. That is a trap as well. A project can have a use case and still fail. It can have good technology and still have weak adoption. It can have strong branding and still lose liquidity. But compared with coins that exist only because people are excited for a few weeks, utility-based networks at least have something deeper to build around. The final story today takes that utility theme even further. Crypto.news covered the growing debate between tokenized deposits and stablecoins on Canton. This is a big institutional story, and it may sound dry at first, but it could become one of the most important battlegrounds in digital finance. Stablecoins are already one of crypto's biggest real-world products. They move billions across exchanges, DeFi platforms, trading desks, and global payment rails. They let people hold dollar-like assets on-chain and move value quickly. But tokenized deposits are different. Instead of being issued by a stablecoin company, tokenized deposits represent commercial bank money recorded on blockchain-style infrastructure. That distinction matters. Stablecoins sit partly outside the traditional banking system, even when they are backed by reserves. Tokenized deposits come directly from banks. For institutions, that can make them feel more familiar, more regulated, and easier to integrate into existing financial systems. If a major bank issues tokenized deposits, it is not just creating a crypto asset. It is turning bank money into something that can move on modern settlement rails. Canton is relevant because it is designed for institutional finance, privacy, and regulated asset movement. The big idea is that banks and financial institutions may want blockchain benefits without exposing everything publicly on a completely open network. They want faster settlement, programmable money, and tokenized assets, but they also want compliance, privacy, and control. This is where tokenized deposits could challenge stablecoins in certain markets. Retail crypto users may still prefer stablecoins because they are liquid, widely available, and already integrated across exchanges and wallets. But institutions may prefer tokenized deposits if they are dealing with regulated bank money, securities settlement, treasury functions, and wholesale payments. So this is not necessarily a winner-takes-all fight. Stablecoins may dominate crypto-native markets and global retail use. Tokenized deposits may dominate bank-led institutional finance. The more interesting question is whether the two systems eventually connect. If stablecoins become the internet's cash layer and tokenized deposits become the banking system's blockchain layer, then the real future may be interoperability between them. And that brings us back to the bigger picture. XRP is tightening near a breakout zone. Analysts are watching for a move toward $1.58 if momentum confirms. The Trump meme coin event shows that hype cycles can cool quickly. The broader market is starting to care more about real utility. And tokenized deposits show that banks are not ignoring crypto infrastructure anymore. They are building their own version of it. The lesson from today's roundup is that crypto is splitting into two markets. One side is attention-driven. Meme coins, celebrity tokens, political coins, and short-term hype trades. That side can move fast, and it can make headlines, but it is fragile. The other side is infrastructure-driven. Payments, settlement, tokenization, stablecoins, exchange-traded products, and institutional rails. That side may move slower, but it could define where the biggest money flows over the next decade. For investors and listeners, the key is not to get blinded by noise. A coin pumping on social media is not the same as a network gaining adoption. A VIP event is not the same as real demand. A technical breakout is not the same as a long-term thesis. And a use case is only valuable if people actually use it. So as we head into the next trading week, keep an eye on XRP around that $1.50 level. Watch whether the institutional demand story keeps building. Watch whether meme coin liquidity continues to weaken. And most importantly, watch the shift toward real financial infrastructure, because that may be where the next phase of crypto gets decided. That is it for today's Daily Crypto Roundup. Drop your thoughts in the comments, especially on XRP. Do you think the breakout is coming, or is this another fake out? And what do you think wins long-term? Stablecoins, tokenized deposits, or both working side by side? Follow the podcast, leave a rating if you can, and as always, we'll see you at the top.